Welcome back. Bruce Porter joins us now for this week's Dollars and Cents. How you doing, Bruce?
I'm good. Good to see you.
Good to see you.
Love your jacket.
Well, I wore this for you, so.
I know, it looks great.
Okay, so today we're talking about something I have no idea what this even means. We're talking about required minimum distribution rules, which RMDs. Yeah. Can you please explain to me what that even means?
Okay, so one of these days you're going to age. And when you get old enough...
No, Bruce, tell me now.
Yeah, you are.
I am?
Yeah, I did.
It happens. It happens.
So one of these days, when you're 70 and a half, and you've got this huge amount of money that you've built up in your retirement plan, the government's going to say, Jeremy, we've let you defer that all these years. Now we're going to force you to start taking money out of it. That's called required minimum distribution.
That's a real thing?
Yeah.
The government can again, I'm just showing you how little I know about money. They can require you to take that money out that you've saved.
Yes, they can. So now you've deferred it all these years, and it's built up and built up and built up and compounded. And now they're saying, hey, before you die, mortality is X. So we want to start forcing you to take money out so that if there's any taxes that are due, we're going to be able to get our tax revenue. But just because it's subject to tax doesn't mean it will be taxed. It depends on your overall situation when you're retired. Now, when we're retired, usually we're in a lower tax bracket. So sometimes you're in a no tax bracket because you don't make enough money. So that whole situation just depends on each individual as far as tax liability, but it is subject to taxation. So now the question becomes, when do I take it out and how's it calculated? Well, the rule is it's the April following your 70 and a half birthday. So if you're 70 in January, you're 70 and a half in June, you got to take it out by the following April.
Okay, so you've got till the next April.
But because it's a crossover year, if you wait until then, that year they'll force you to take out two distributions, one prior and one after. So now, the reason you may not want to do that is it creates additional revenue that you would have subject to taxation.
Right.
So it's better when you turn 70, just suck it up. We're going to take an RMD out this year and then get it on a regular basis.
Well, how do you know if you're going to be taxed from that then? If you start taking it out, how do you know if that's taxable then?
You don't. You can calculate your provisional income. That's a conversation for another day.
Okay.
But all taxable revenue coming in, and then they take half of your Social Security and they put that in a calculation called your provisional income. And then that will determine how much of your Social Security is taxed. Now, any money that comes in that is unearned income is subject to tax, but we have these things called deductions. So when you get deductions, it may offset the revenue. That's for a tax person.
Okay.
So you get your tax person to help you navigate through all that. But the bottom line is we're forced to take it out. We've got to take out the distribution before December 31st. And if you don't, they're going to hit you with a penalty of 50%. So in the illustration that we're using, if we don't take out the $3,650 that is the distribution on this example, there's going to be an $1,825 penalty if we take out $3,649. Because we should have taken out $3,650.
Are you just $1 shy and they're going to charge you that?
Could be 1 penny. That's the significance of making sure that the calculation is accurate and we get it done on time. But that's where always ask an expert, always get some advice, and don't wait till the last minute, because once the deadline is here and gone, you're just going to be penalized for not taking it out.
So really the rule is to stay on top of it and really kind of know what you're going into when you're 70 and a half, correct?
Right.
Oh, wow.
You turn 70, that's when you got to really review everything you got. But you get advice, you go seek help. There's lots of people that can help. Besides your accountants, you can get financial people, your bankers. You need to know if they're going to calculate it for you or if you need to do it on your own. I like the companies that do it for you because they guarantee it.
They're good. Bruce, can I just say, every time I talk to you, I feel just a little bit smarter. Just a little bit. I thank you for that, sir.